Hello everyone! Welcome to our accounting series, Income Taxation Edition. So for today, our topic will be itemized deductions. So this topic would be divided into two parts, and for this video, we will discuss the part 1 of this topic. So first, let us know, ano nga ba yung ibig sabihin ng deductions from gross income? So, deductions from gross income pertains to business expenses incurred by a taxpayer engaged in business or engaged in a practice or of profession. So, tatandaan ulit natin, ang deductions pertains to business expenses incurred by a taxpayer engaged in business or engage in the practice of profession. So, mahalaga na tandaan natin yung meaning ng deductions from gross income. So, for the tax reporting classification of deductions, we have 4. We have cost of sales or cost of services. We have regular allowable itemized deductions. We have special allowable itemized deductions. And we also have net operating loss carryover. Pero for today, magfo-focus lang tayo sa regular allowable itemized deductions. So, alamin natin kung ano nga ba yung meaning ng regular allowable itemized deductions. So, regular allowable itemized deductions pertain to necessary and ordinary expenses paid or incurred during the taxable year, including directly attributable costs in carrying on the development, management, operation, and or conduct of the trade, business, or exercise of profession. So, bakit ko ba binold yung certain words? So, binold ko sila kasi sila yung requisites to know kung ano nga ba yung mga itemized deductions na need natin i-deduct from the gross income. So first, it shall be a necessary and ordinary expenses. So yan ang una natin. Pangalawa, it shall be paid or incurred during the taxable year. So dapat babayaran siya or nangyari siya sa taxable year kung kailan mo siya i-deduct. So, yun yung pangalawa. Pangatlo naman natin, it shall be directly. Yan ha, tatandaan natin. Directly attributable sa conduct of the trade, business, or exercise of profession. So, kapag indirectly attributable siya, hindi siya kasali. Hindi mo siya pwede i-deduct from your gross income. So, yun ang third. Ang pang-fourth naman, hindi ko na naisama dito, is it shall be supported by sufficient evidence. And fifth, ito naman ay parang general knowledge na. It shall be not against the law or any public policy. So, additionally, expenses that are directly related to rendering of services or in the acquisition of goods naman are excluded from the regular allowable itemized deductions. Kapag directly related naman siya sa pag-render natin ng service or acquisition of goods, yun naman ay excluded. Excluded dapat siya. Hindi siya allowable deduction. Pero, if those expenses naman are not directly related to the acquisition or selling of goods, included siya in regular allowable itemized deductions. So, an example naman nito ay administrative and selling expenses. So, let's proceed to the next slide. So, dito, nakalista lang yung examples sa mga itemized deductions from gross income. So, we have interest expense, taxes, losses, bad debts, depreciation, depletion, charitable and other contributions, contributions to pension and trusts, research and development costs, and other ordinary and necessary trade, business, or professional expenses. So, lahat ng yan, madadaanan natin. Pero sa iba, magfo-focus ako sa iba, dadaanan natin. Next. Yon, unahin natin. Interest expense. So, ano ba yung mga requisites natin para malaman kung ang isang interest expense ba ay deductible sa gross income? So, we have 5 requisites. First, there must be indebtedness. So, dapat may utang. Pangalawa, dapat yung utang na yon ay utang ni taxpayer. Pangatlo, yung utang na yon ni taxpayer ay connected sa kanyang trade, business, or profession. Pang-apat, meron siyang legal liability to pay interest. Kumbaga, need talaga niya mag-pay ng interest. And fifth, that interest must be paid or incurred during the taxable year. Dapat siya ay bayaran o nangyari doon sa taxable year kung saan mo siya i-deduct. So, paano ba siya i-solve? So, to solve the deductible interest expense, our formula is gross interest expense minus yung interest income times 33%. Ano ba tong 33% na to? It is referred to as the arbitrage limit or the arbitrage cap. Ito bang 33% na to since time immemorial, 33% na talaga? No. Nagbabago siya over time. So, we have to remember that yung arbitrage limit na ito, subject to change siya. Lalong-lalo na ngayon, kung nabalitaan nyo, meron ng pinas sa Senate na create bill na para baguhin yung flat rate natin na nakasanayan na 30% na corporate income tax. If ever na mabago yon, magbabago din yung arbitrage limit natin kasi it is used in computing the arbitrage limit. And also, it is also important to remember na ang arbitrage limit, hindi lang siya applicable to a corporate taxpayer. So, it is, ang arbitrage limit natin ang arbitrage limit natin is applicable to any taxpayer subject to regular tax. So, yun ha, remember. Arbitrage limit is subject to change. And second, ang arbitrage limit is applicable to any taxpayer. Hindi lang siya for corporate taxpayer, it is for individual and corporate taxpayers. So, let's have an example here. So, we have an interest expense of 500,000 and we also have an interest income of time deposit gross of 50,000. So, to compute the deductible interest expense, we have 500,000 less the arbitrage limit na 50,000 which is yung interest income natin times yung arbitrage limit natin na 33%. Kapag sinolve natin to, we will have 16,500 na ililess natin sa gross interest expense sa 500,000. So we will have a deductible interest expense of 483,500. Next example, we have interest expense again of 500,000, interest income of promissory notes, 50,000. So to compute that, 500,000 less arbitrage limit of 0. Bakit wala tayong niless na arbitrage limit? Because yung interest income from promissory notes is not subject to final tax. So, another thing to remember for interest expense is that yung interest income natin shall be subject to final tax. Okay? So, let's move on. So, ang example naman natin ng other deductible interest expenses pa is interest from tax delinquency and interest from scrip dividends. Ang example naman ng mga hindi deductible sa interest expense is interest on personal loans, interest incurred with the related party, discount or pre-deducted interest applicable to future periods for individual taxpayers, interest expense incurred to finance petroleum operations, interest on redeemable preferred shares, and imputed interest. So ito, mga example sila ng hindi allowable na deduction. Next, we have taxes. So, ito yung mga deductions na paid or incurred within the taxable year in connection with the taxpayer's trade, business, or exercise of profession. So, nakabold na naman siya. Ibig sabihin, sila ay requisite to know if these taxes are allowable deductions for the gross income. So, first, kailangan binayaran siya or nangyari within the taxable year. Second, dapat in connection siya with the taxpayer's trade, business, or exercise of profession. And third, di ko pala naila. Third, it shall be imposed on the taxpayer. So, yung mga nakalista dito, sila yung mga kind of taxes na hindi allowed as a deduction. So, una, Philippine income taxes except yung fringe benefit tax. So, anong examples ang meron tayo? Final income tax, CGT, at saka regular income tax. Second is foreign income tax if claimed as tax credit. We will discuss this later on. Third is estate tax and donor's tax. Fourth is special assessment. So, other non-deductible taxes rather, ay business taxes and surcharges or penalties on delinquent taxes. So, ito naman ay examples of deductible taxes. Percentage tax, excise tax, documentary stamp tax, occupational tax, license tax, fringe benefit tax, local taxes except special assessment, community tax, municipal tax, and lastly, foreign income tax if not claimed as tax credit. So, ito yung gagamitin nating example. So, foreign income tax can either be claimed, dalawa. We have a deduction approach and meron din naman tayong tax credit. So, sino pwede mag-claim ng tax credit? Sila yung resident citizens, domestic corporations, members of general professional partnerships, beneficiaries of estate or trust. So, in short, sila yung mga taxpayer na may world income. World income. So, we have a illustration here. We have gross income for Philippines na 2 million, gross income for US 1.5 million, and expenses natin na incur na Philippines is 500,000, expense in US 700,000, quarterly estimated income tax paid in the Philippines 200,000, tax paid in state California of 200,000, federal income tax paid 250,000. So, paano natin siya iso-solve using a deduction approach? So, yan. Ang solution natin is, first we will get the total of the gross income from the countries, from the Philippines and US, which it has a sum of 3.5 billion. Then we will less yung expenses incurred natin sa Philippines, US, and dito din natin sa portion na to ililess yung national tax paid natin in the US. So, we will, pag pinag-plus natin itong lahat, we will have a sum of 1,450,000. So, 3.5 million minus 1,450,000, we will have a taxable income, world taxable income of 2,050,000. So, we will multiply that by our current corporate tax rate of 30,000. So, magkakaroon tayo ng corporate income tax due of 615,000. Tapos, after corporate income tax due, tsaka pa lang natin ililess yung Philippine quarterly estimated tax payments na 200,000. So, we will have a income tax payable of 415,000 for the deduction approach. So, we will have a total of 440,000 of tax credit na ima-minus natin sa 690,000. So, we only have an income tax payable of 250,000. So, anong mas magandang approach sa dalawa? It depends kung ano yung mas murang tax na babayaran mo. Diba? Next, we have losses. So, losses are actually sustained during the taxable year and not compensated by insurance or other indemnity shall be allowed as deductions. So, anong requisites natin for the deduction of losses? First, the loss must be business loan, not a personal loss. Business loss pala, I mean. So, again, dapat connected siya sa trade or business or profession ng taxpayer and hindi siya a personal loss. The loss must be a ordinary loss. I-discuss natin kung anong meaning yan mamaya. Third, the loss must be actually sustained, not temporary, which means that yung loss na yon must not be compensated by any insurance or indemnity contracts. So fourth, a declaration must be filed by the taxpayer within 45 days from the date of discovery of the casualty or robbery, theft, or embezzlement giving rise to the loss. So again, it is important to remember, must be filed by the taxpayer within 45 days. So, ang fifth naman, the loss must not have been claimed as a deduction for estate tax purposes on the estate tax return. Kasi magkakaroon tayo ng double deduction, and that is not allowed. Next. Yon. What are the two types of losses? So first, we have the ordinary loss. This is the kind of loss that is normal to the taxpayer's trade or business, deductible in full. We also have a capital loss, which is deemed by the law an unnecessary expense. Hence, it is only deductible only up to the extent of capital gains. Kumbaga, deductible lang siya doon sa extent na na-gain mo. Kumbaga, wala siyang negative. Ganon. So, we have a special rules on losses. First, yung wagering losses, which ang example niya is yung gambling and passive activities. So, it is only deductible only up to the gains from the same transaction. So, second, loss on sale between related taxpayers is not deductible. Again, related taxpayers is family, close friend, or anyone related to the taxpayer. Third is the voluntary removals of buildings. So, may dalawang situation tayo dito, which is kapag yung taxpayer, pinurchase niya yung land without intending to use the building, ibig sabihin, yung land na yun may building na doon. So, the value of the building raised plus yung other costs are added to the cost of land. Second naman, if an old building is demolished to construct a new one, yung cost na ginamit for demolishing the building at yung demolition cost na din, yung mga ginamit na equipment for demolishing, pwede siyang deductible as losses. So we have an illustration here. In 2015, Poy's residence was totally destroyed by fire. The property had an adjusted basis and the fair market value of 130,000 pesos before the fire during 2015. During 2015, Poy received insurance reimbursement of 120,000 pesos for the destruction of his home. Poy's 2015 adjusted gross income was 70,000. So, Poy had no casualty gains. Wala siyang casualty gains during the year. What amount of the fire loss was Poy entitled to claim as an itemized deduction on his tax return? A, B, C, or D? So, ang answer natin dito ay A, 0. Kasi yung casualty fire suffered by Poy that destroyed a residence, his personal residence, is not connected with his trade or business. Hence, the loss suffered is not deductible from gross income. Again, dahil siya ay personal residence at hindi connected sa trade or business, hindi siya deductible from gross income. So, we also have bad debts. These are debts due to the taxpayer which were actually ascertained to be worthless and were charged off within the taxable year. So, bad debts. As we all know, accounting term siya na it is a kind of debt na hindi mo na talaga siya kayang makollect, uncollectible na talaga siya. So, ang requisites of claim for deduction of bad debt. So, the debt, again, must be ascertained to be worthless. So, dapat uncollectible na talaga siya. As in, hindi mo na siya masisingil sa taxpayer. Second, it must be charged off within the taxable year. Third, it must be again connected with the taxpayer's profession, trade, or business. So for example, paano kapag may uncollectible personal credit ka? So, ang sagot doon, hindi siya deductible. Kasi personal credit siya. Hindi naman siya related sa taxpayer's profession, trade, or business. So fourth, the taxpayer must be under the accrual basis of accounting. And fifth, it must not be incurred from a related party. So again, hindi dapat siya incurred sa iyong family, sa iyong close friends, ganyan. So ano ba yung examples of capital losses that are not deductible as bad debts? So we have bad debts from personal receivable, securities becoming worthless of taxpayers other than domestic bonds and trust companies, a substantial part of whose business is the receipts of deposit, and third, the loss on capital investments in partnerships, joint ventures, or corporation. So, that's all for the itemized deduction part 1. So, thank you for listening and watching our video. And I hope may natutunan man lang kayo sa aking discussion. And don't forget to stay tuned for the part 2. Thank you very much.